Ladies and gentlemen, it's Adrian Zlunchuk, CMT Charter Market Ignition. Welcome to the 6th edition of our Trading Congress 2024. It's the 6th edition of our virtual trade summit for traders, designed actually to help you become profitable in just a couple of days, coming from the best experts, the best speakers, people who have skin in the game, people who know what it means to have lost a lot, who basically know how to win even more than they lost, right? Those are incredible people, founders with a lot of journeys, with a lot of background stories, who made it in a space in many different shapes and fashions. Because in the world full of scammers, you have to find the right guidance. In the world full of scammers and filthy self-proclaimed experts and gurus who are going to mislead you basically to all those different financial ruin, well, you have to know who you can trust, because there's a lot of mistrust. And today's guest is actually the quite opposite of that. You have to know that following the right people, just like our today's guest, is actually one of the ways to making it and for real in a space. And actually, before we bring in our today's guest, this is a kind reminder that we're literally right now celebrating with the entire world the Black Week, the Black Friday celebration throughout the entire weekend, which means that you can actually get access to all those materials to stop missing all those crazy pumps, stop getting wrecked when the market's done really good for you, with all the access to the education, with accredited financial literacy, with all the software skills that you need in order to make it. Basically, and all you have to do is just grab the QR code that is going to grant you 50% off, or even more if they can't go for the longer duration memberships. And all you have to do is just, like I said, scan the QR code, and just maybe you're going to get access to all this information that is going to be very helpful for you to making it in the process. And without further ado, I want to bring in today's guest, Paweł Łaskarzewski, who is the man and my true friend that I know for many years, a man behind a lot of successful ventures and startups, and who has made a lot of very successful and profitable exits, who's right now running one of the leading RWA projects that is called Nomad Fulcrum, right? Which is a Swiss-based tokenized hedge fund, and that is fully regulated and on the RWA kind of like a trend, I think. And the train, I think it's very, it's lining up to become a very, very fruitful business operation on his end. And full disclosure, full transparency, Paweł and I are very good friends. So if you see me smiling or laughing a lot, that's why, because we spend a lot of time together. And on top of that, partnerships, that Paweł and I we've had on the organizational level between the Burbness and Nomad Fulcrum. We are actually partners. I'm equity investor in Paweł's company. I'm a token investor as well. So there's a lot of very deep mutual respect that I have for Paweł. Welcome to the show. How are you feeling today?
I'm feeling very well. We are back in the business. Bitcoin is going up. Everything is going up. The next year is going to be super beautiful. Trump is going to be appointed. The Christmas, the Chinese New Year Eve is going to end, and everything should blow up, beautifully up for all of us. So I'm super hyped.
Well, I mean, I still don't get it why so many can think of any single thing that you said as take it as bearish, right? I mean, there are so many bullish factors that are just push the market higher. It's crazy. But why don't we kind of like just get a little bit of an introduction to the story, to you, what it's happened, why it's happened and how it's happened for you to be basically on the 30th of November 2024 on today's stream.
How did it happen?
How
So,
did it happen and what's the story leading to it, right? Why
so
it's crypto and nothing else beside?
why it's crypto? I was starting in crypto like a long time ago, while initially as an engineer, because that was for geeks mining Bitcoin early days. But that was like a long time ago, and this was when everyone in the basement was speaking, like engineers, I mean, were speaking about the Bitcoin. It's a new currency. Everyone was laughing. No one was believing in that. Like that was the true story. And then fast forward after a few companies, 10 years later. 2020, I got back to the business with my first company in crypto. Before that, I was in the financial sector, so I seen how broken it is and how many problems of traditional finance market, crypto is solving, but also how crypto can be beneficiary of the solutions that are on traditional market. Like in crypto, we don't have liquidity. On traditional market, you have liquidity. On traditional market, we don't have tradability 24/7. You have it in crypto. So those things are connecting to each other very well, and they fit each other. And when I get into the market back in 2020, I started getting along with the new things that are happening. And I thought, okay, like we see a lot of things. We are at the very beginning of the growth of the market. Like it's nothing happened yet. Today, nothing happened yet, but in 2020, it was even less. So I thought, okay, so everything needs to be built from zero. Everything needs to be provided. Nothing has been done so far. Everything looks like in 90s. So let's try to build some things for the community, for the society, for the crypto people, for organization, businesses, etc. And that's how it started. And that was the moment when we met, which was leading me to the point where we are today on this particular life together.
Interesting so much so that the RWAs are, like I said, just blooming right now and going crazy in terms of the adoption. Of course, we have Larifing and the BlackRock and all the biggest funds basically on the institutional side. The pension funds, wanting to go tokenized. The crypto kind of like a revolution is really taken, is shifted to another gear. And what do we make out of that in the RWAs? And why don't we kind of like run a little bit through for the overview for what's happening, what's hot right now in the RWA side?
In general, traditional market and the crypto market started combining to each other, and the uh, well, very clearly visible line between DeFi and traditional and TradFi started to be a little bit blurry right now. Why? It's very easy because so far the crypto was like very small in terms of capital, trading volumes, amount of people, etc. And once it started to grow up heavily, when it started to attract new users, new capital, institutions, regulations, which is important to onboard institutions because they need to feel safe, secure, and that they have some kind of rights in here. That started to putting interest for the people that are in crypto for other assets that are basically traditional market assets, and that also started to create a huge interest around the assets that are on traditional market, but are not having the traits of the crypto assets, which means fractionalization, tradability 24/7, accessibility. And a very clear example is one of the biggest organizations and funds in the world, which is Berkshire Hathaway, where Series A stock costs like $700,000, $800,000 per one share. You can trade it from Monday to Friday from 9 to 5. Basically, accessibility to that is like very limited because who has $800,000 to buy one share? And third, with crypto, you can have fractionalization and you can have an ownership, etc. So those two markets are, combining heavily the traits each one of those is providing. So that's how it started, in my opinion, and that's why right now everyone, literally everyone in the traditional financial sector, Citibank, Santander, JP Morgan, BlackRock, everyone is speaking about RWAs, about tokenization, and how their businesses can benefit from using blockchain as a technology and using crypto as a new opening for the capital and financial markets worldwide.
I got you. So, why I understand the accessibility, and just letting a lot of people, in terms of getting the adoption. Of course, we saw what happened with gold after they adopted ETFs in 20 years or so ago. We know for a fact that Bitcoin has gained even far more of an interest that gold ever attracted before, right? Doubling and tripling basically the numbers of what gold was operating on the ETF side, in just the first days, basically, right? Which shows you how much overwhelming demand there is on the institutional side. And it was January early this year, was way before crypto retail market actually just realized, okay, we're actually going anywhere, right? So here we are on the 42-44% kind of like a retail interest for what it was versus 2021 in May in the peak time, meaning basically that the retail is 4 or 5 out of 10 basically saturated, aligning very well with the long-term valuation methods and indicators such as MVRV, net unrealized profit and loss, showing the market bloat basically and the profitability. And there is a way to go, right? And knowing that there is a way to go, like a lot of people might just want to get exposure into RWA assets, right? So why don't we define about what the RWA assets are for them in the layman terms and how they can actually just get engaged in the space?
Right, of course. So like my definition, because like you have like many different definitions of what RWA actually is. But my definition is like digital crypto assets are the assets that are natively on blockchain and are backed by the native mechanism of the crypto. For example, cryptocurrencies, which are native coins of the blockchains, are fueled by the fees that are being paid by the user while executing transactions on the blockchain. So this is the native fuel for the value of that coin. The native fuel for Launchpad coins are, for example, the projects that are being listed on the exchange, which is also native thing for the token. And the things that are being backed by the something that is on traditional market, like painting, stocks, currencies, traditional market currencies, which is putting also every stablecoin as an RWA asset because they are backed by RWA, right? And this is, in my opinion, the RWA asset. So basically, crypto asset is derivative for underlying asset of traditional market. It can be anything. It can be a glass, a factory, a building, a yield, anything, but that exists on traditional market, not natively on the blockchain. So that's the definition of RWA.
I got you. And on an example of, let's say, your project, right? Nomad Fulcrum, that, like I said, I'm an equity holder and I'm a token holder for everybody who's watching that right now for the full transparency and an understanding, right? Disclosure. Now, how does it operate? Like, what do you actually tokenize there?
Of course. So we have in crypto a couple of different approaches for tokenizing different assets. So like Ondo and other companies like that, they tokenize single asset, right? They tokenize bonds, US bonds, or BlackRock build fund. Stablecoins tokenize dollar, basically, one-to-one. And the problem with this kind of protocols is that they do not have influence over the yield. So they are being driven, the business is being driven by decisions of someone else. So this is one of the areas of tokenization, single asset tokenization, which is like in case of Ondo and any other company tokenizing single asset, which is generating passive yield. Then we have companies that are generating active yield. So they have influence over the yield they generate, which is every company that is on the capital markets or every other company that is having any influence, like companies that are generating revenue and they tokenize that revenue, which is pretty hard right now because very often they are being recognized as securities because that's equivalent of putting the company on the stock market. So what we do as an organization, we are in the second group, but we are doing this in a fully regulated environment. So we have a asset management license in Switzerland. We have few more, and we are obtaining much more worldwide in different regions. But the idea is that we have AI strategies that actively do transactions on traditional market RWAs like commodities, treasuries, currencies, indexes. And the yield we generate doing those transactions, doing longs, shorts, buying, selling, this and that in different time frames on different types of assets, the yield that we generate, then we convert into the crypto to provide to our protocol users that are deploying stablecoins to us to generate yield that is based first on traditional market, which is ultra liquid. Because like in crypto, we have this problem that during the bear market, you can generate like 4, 5, 3, 2%, which is a yield, I mean, which is not beating the benchmark and nor even inflation benchmark like S&P. And the problem is that you don't have a cash preservation mechanism in crypto. So today you have a choice in crypto between like high risk speculation on the assets and low yielded products during the bear market. So we wanted to find a problem of that thing. And the problem of this is lack of liquidity. During the bear market, there are no transactions happening, liquidity is very low, etc. And on traditional market, there's all the liquidity of the world. So that's why we are focusing on generating yield on traditional market, liquidity, convert and tokenize yield we generate into the crypto in form of DeFi protocol. So every holder of stablecoin, any stablecoin, can deploy stablecoins to us. We can generate yield on that stablecoins and provide them yield that is beating the benchmark and inflation. So this is what we do in general.
I got you. So, you're obviously kind of like bridging, the solutions for the TradFi, for the traditional finance to get it and hold the stake basically in an exchangeable fashion, in a liquid fashion, in a Web3. So if they want to get exposure, basically, and then have the safety of TradFi and at the same time exposure in Web3, this is where they go, right? For the tokenized hedge fund like that. That is tokenizing the yield, for instance. So what I'm thinking of in terms of the capital markets, right, and how it all integrates with the future of DeFi. We see the trends, we see the numbers, we see where it's going. We see that it's both DeFi, and the Web3 as a whole, right, is actually on the uplifting curve. And there's no way to debate. There's no way to kind of like argue that because the numbers are there. We cannot just pretend that they don't exist, right? But let's talk about the change. How close are we to actually adopting DeFi like globally, right? And how can capital markets, for instance, evolve truly to appreciate the DeFi? Is it possible at all that it fully absorb and adopt the DeFi?
Yes, in my opinion, it's very possible, and the tokenizing capital markets is hard. That's why we are doing this because, like as Kennedy said, we are not doing this because it's easy. We are doing this because it's hard. And as you were the witness of our last interview with Mario Naval in Dubai like a few weeks back, he said exactly the same thing. Tokenizing of capital markets is tough thing because a lot of different regulations are being put in place. It's easier what we do, tokenizing of real estate, which is also true. So I believe that in the future we will see a growth of tokenized capital markets because of few reasons. First, regulations. Regulations are being put in Europe. We have MiCA, we have DLT pilot regime, we have DORA, we have different regulations that are trying to shape the crypto market somehow so we can create a sustainable solutions without all the scammers that you mentioned at the very beginning of today's live, and removing them out of the equation and creating the products that can be used by average user and can be also integrated within the institutions. And institutions can get regulated and safely also collaborate with the crypto companies as they were normal financial companies on the financial market, but operating in a different sector, which is blockchain and crypto. And that's it. And I believe this is going to be like the next decade is going to be the decade of switching the old legacy systems of traditional capital markets into the new wave of what is being brought with crypto. But it is not only crypto changing the financial market, but financial market is changing crypto heavily. We've seen it already after introduction of Bitcoin ETFs, of Ethereum ETFs. The characteristic of Bitcoin and Ethereum changed. It's enough to see what are the volumes during the weekend. During the weekend, capital markets are not working. They work from Monday to Friday from 24/5. And during the weekend, the volumes are going down, the market is much more calm, etc., etc. So we see already those characteristics because of the institutional capital that is floating in. But also, Bitcoin and Ethereum ETFs were the most successful ETP products like since ever that have been introduced on the market, which is showing that crypto is also changing the traditional market. And this this border that was between those two markets started to disappear right now. And very soon, in my opinion, we will see crypto as not the crypto market. We will see this as a new asset class, like commodities, treasuries, currencies, indexes, crypto, and stocks. And we will see different asset class. And this is going to be just part of the global capital markets. That's it. But things that blockchain provides, which also allow us to have a new things on new features on the capital markets. Today we can do, as I said on the very beginning, trading on or buying stocks from Monday to Friday from 9 to 5. So we will have tradability 24/7, which is going to change the market completely, because the people that had information advantage over the other market players, because they knew what is going to happen over the weekend and they could take any positions like before, etc., or they knew to sell something and others didn't, and they were not able to do any kind of damage control. This is going to be reduced heavily because of this. And also another element is that today, any asset we own, any asset, is it currency, stock, whatever, we are lease taker. We are not owners. So with the cryptocurrencies and implementing blockchain underneath as an infrastructure for financial institution, we finally will become the real owner of that. And what will that change? That will change one thing, that we will use every asset as a financial value. So for example, I can go to my shop and buy bread using a portion of my Tesla stocks, paying using that. Because on the market, those Tesla stocks can be sold. Today, they are asset that is not going to be used like that, because the liquidity is available from Monday to Friday from 9 to 5. So over that time, I would not be able to use that. That's the conversation we have with that guy in Abu Dhabi, right? So so I believe that a lot of elements is going to shift toward completely new and undiscovered waters yet. And the possibility of the growth, building new business and economy, and the contribution to the global economy is going to be tremendously big. And yeah.
I just recalled which guy you were talking about.
Yeah.
Funny stuff. Although, as we kind of like, dove a little bit on the regulatory side and the compliance changes, there's of course going to be a little bit of an earthquake coming in the European jurisdiction, basically, for the MiCA, right? And not even so for the European for jurisdiction alone, but for everybody who's actually targeting Europeans. And that's something that we had already had a session, with our incredible lawyers at 3 Dots, the law firm that actually just contributes to creation of the MiCA regulations. Although, simple points is practical, kind of like a question, as many people ask. Okay, so there are a lot of exchanges that are delisting Tether right now, USDT, right? They're leaving kind of like on the exchanges, they are only leaving USDC. Okay, as the circle, because of the one basically holding up the MiCA license.
Mm-hmm.
So does it mean that Tether, in the light of those regulations coming in just a couple of weeks, does it mean that Tether is basically going bankrupt and it's all going to disappear and it's just going to shake the entire market like crazy? Or it means there's basically going to be a very smooth transition from Tether and flow into USDC, and there's going to be no change, kind of like whatsoever, to the crypto balances? Or what's the future that you just expect there?
So I believe that Tether will become regulated, because they started investing. Like they said, we will not gonna be regulated, and because of the MiCA on futures, which is the most profitable product on every exchange, they have been delisted in majority of the futures market on European exchanges, on exchanges that operate under European law for European clients, right? But recently, Tether bought or invested into another stablecoin company. I forgot the name. It was Quantos Payments, I believe, and they do Euro Q and USDQ regulated stablecoins. So they might be on the European market, but through another entities, because after all, no one will skip the market where you have like over 300 million users or possible customers, which is like potential profit. So I guess that Tether is trying to play right now on the being a rebel on the market. Maybe there are books that they have, because like no one knows what is in the book on the books of Tether, right? So that's another element of what is like uncertain in terms of Tether. And but in my opinion, after all, in the next like few years, we will see this regulatory tsunami that is coming and will change the whole market. So every organization needs to shift. And in my opinion, Tether is trying to delay that thing like heavily, because that would put on them in some jurisdictions or in some context additional requirements in terms of KYC, KYB, compliance, this and that. And I believe, especially given the fact that Tether was the first one and was the most used by degens, etc., everyone that is looking for anonymous, way to generate transactions, and if there will be not any stablecoin, then there will not be a possibility for them to do such a thing. And I believe Tether wants to capitalize on that part instead of the regulated part. But in the same time, they invest into other entities that are regulated, buying them and using them as a facilitator, as a facade of Tether onto regulated market. And but underneath, it's still like Tether infrastructure, right? So they are playing two games at the same time, in my opinion. So yeah, I don't think that Tether will collapse at all.
Yeah, playing two games and at the same time, kind of like is what we call hedging, otherwise financial terms, right?
Yes.
So let's talk about hedging for a moment. So hedging with the RWAs, basically, right? Hedging with the RWA backed tokens. How is it possible? How does it operate? How is it possible? How can anybody get engaged in that?
Hedging of RWA tokens.
Well,
You said?
hedging against crypto volatility with stable
Okay.
reward asset-backed tokens. Yes.
Yeah. So as I said before, like there a lot of capital has been made in crypto, and there is a lot of money, a lot of capital is floating in because of the institutions, etc., and new users that are coming still into the game, new exchanges, and everything is growing like heavily, very fast. And this capital is looking for, very often it's operational capital, venture capital. It's the capital that is not looking for a risk. But the problem in crypto is that they can generate, like maybe in the bull market, they can, hedge it against the benchmark and inflation. But the problem is that the bull market is 25% of the overall time in the crypto. So 75%, it's a bear market. So if you will make an average from this 25% profit hedging, where you hedge, let's say 10, 15, 20, 30%, so average is going to be much smaller. It's going to be a couple of percent. Which is basically reducing the loss you have on the inflation. So I believe that the main mechanics for future hedging of the capital in crypto against inflation and against benchmark like S&P are going to be hedge funds like ours that are having influence over the profit they generate, because they have strategies, they actively manage capital all the time, looking for new possibilities to generate profit on the market. They are running prop desk, they are running hedge fund, they are running different profitability legs that are somehow trying to hedge that capital, generate yield and coupon on top of the benchmark, right? And the companies that are doing things like single assets tokenization, like Ondo or any other company that is doing single assets like buildings or real estate, etc., that you will not get more than 10%, 6% out of the building. You cannot fit physically more people into that building to rent it like more, right? So those are somehow limited, and this is a passive yield. But those elements might be used as a strategies for trading and for hedging by the companies, the active management companies. And right now, as a organization, as Nomad Fulcrum, we do transactions on traditional market, like on commodities, treasuries, currencies, indexes, etc., stocks. But once those assets are going to be also available on chain, we can switch our strategies from traditional market transactions on the interbank market onto the on-chain transactions, because that's basically the same asset. So we can switch into transactions. So basically, I believe there will be a very interesting composability between those organizations. So single asset RWA companies are going to bring assets that other active hedging companies and active asset management and treasury management companies like ours are going to use, not to switch and have operational work by switching the capital between crypto and traditional market all the time, but being natively on chain all the time, which is something that everyone is looking for and speaking about, etc. But this is like far away from where we are at right now. So that's why I believe we are in this momentum, which everyone is, and a lot of people, a lot of market players are calling Web 2.5, where we are combining the best of the traditional market, the best of the crypto market, combining this together, providing the value to the end user. Because after all, is it so much important? Is it like crypto technology or Google technology or Yandex or Jack Ma technology or whatsoever? It's about the value to the end user. And the user decides if they want to use the degen stuff or if they want to do not degen, like fully centralized things, because they see where the value is. But if you can slowly combine those things, those two things together and provide the value, in my opinion, that's the best. That's the best way.
All right. And the best way, I mean, for many people would mean, going for 10x or hunting for 100x or, wanting the meme coin kind of like type of returns. However, taking into consideration, the bear market, for instance, that most of the crypto just basically, shrinks by 90%, like most of it, right? Many coins just disappear out of nowhere. There's going to be million meme coins that are most likely going to be dead and no one ever will ever mention them in their life. Bitcoin typically, runs down 70-80% drawdowns or even more. Ethereum the same. So we know what the history is, we know what the track record is, and this is also this becomes our extrapolated expectation onto the future, right? Still, having solutions where tokenized hedge fund and tokenized yield basically comes up like that you can just have the hedging part with the traditional finance returns, and having the liquidity basically of crypto. Well, that might be a good fit for a lot of kind of like bear market investors and bear market traders, right? When the hedging time comes, basically, this lines up to become, I think, a good opportunity to make, let's say, a year per annum 20-40% return when everything else just falls apart and loses 90%, for instance, right? Then the actual percentage difference is this 90% loss that could have been made but was not made, right? And the actual return coupon on top of that, like, so there's like 120, 130 percentage points basically of advance of relative performance of those, of such a hedge fund, of such products, for investments, as opposed to the typical crypto through 2026. It seems that the bear market lines up to be 2026, just like it was 2022, just like it was 2018, like it was 2014 and 2010, freshly when Bitcoin hit the exchanges, and so on and so forth, right? So we know what the story is, we know what it lines up to be. So would you say that, for everybody, out of the viewers and listeners who perhaps want to get engaged, like, how can they hold a stake in Nomad Fulcrum? How can they get engaged in what you're doing? How can they feel, more secure and basically with the hedging throughout the uncertainty?
So first thing, we are going to release the platform very soon where people can engage with our platform to deploy their stablecoins that will work within fully regulated entity, will generate yield coming from traditional market RWAs, which is sustainable throughout the whole period of time. And that's going to be released like very soon, like it's end of December, beginning of January. That's going to be the first product. Then the second product that we are aiming to launch next year is going to be some sort of like liquid staking, where you will have a token that is fully collateralized by capital. So let's imagine you deploy $10,000, you get 10,000 tokens of this. And those $10,000 are the collateral that this token is pegged for. And this collateral is being managed by our strategies. And the yield that we generate, we put back into this collateral, which increase the value of the token automatically on the market, which is giving you ultra liquid asset that is generating yield. So for example, you can do overnights with us. Show me the protocol or any other solution that is able to generate you double-digit yield, and you can do overnights in there. So there is like very small amount of such or non solutions like that. With us, you can just buy a token, hold it overnight, sell it on the morning on the market because there is liquidity. That's it, done. And you can then have such a product. And we will have different things like this. We are planning to create a product together with one of the largest and the market leader in the RWA sector. I cannot say the name right now, but we are preparing one of the products together with them. We see also other companies that are interested to do some kind of joint venture with us about releasing the products together, which means like once you are having capital, you deploy capital into different assets to make money out from that, you diversify, right? So our plan is also, as we created a tokenization framework that is tokenizing our strategies in the first place, because that's the biggest need in the crypto, to hedge capital against inflation and the benchmark. But as you said before, people are looking for other things as well. So we want them to diversify with us. That's why we are doing these partnerships. Like everyone is asking, every VC, every organization that we speak and talk to, they ask, but who is your competitor? I said that we don't have competitors, we have partners. Because if we have a competitor, we can create a joint venture. And I can have a client who works with us, but he's not depositing 100% of his net worth into us. He's depositing a percentage of that. But another percentage he wants to deploy into real estate, into, I don't know, whatsoever. But we can provide him exposure to those assets so he can diversify with us, and we can get a portion of the profit from that as an organization and grow on different products that are not the ones that are natively created by us, but by the partners. So that way we can create a partnership, bigger capital base, but also bigger attachment of the customers, because they will know that we, as a fully regulated entity, validated those organizations because we are required to do so. That's the first thing, but also that we provide them also the ways to diversify. So that's how they can get along with the products. And then we will have also our token that is going to be listed on exchanges early next year. And that token will allow users to have exposure to the profit of the organization itself from the total TVL that is going to be in the protocol. In every product is going to generate yield. A portion of the yield goes to the liquidity provider, portion of the yield is going to be kept by us as an organization to run the business, and portion of that is going to be distributed to our token, to users that are holders or owners of our token, which is another also financial product that we will release. So those are the ways they can keep in touch in terms of the business side of ours.
I got you. And for everybody who's watching and viewing this right now, actually, I highly recommend in the meantime, for you to go ahead and give a follow to Nomad Fulcrum on Twitter, on X, exactly what it is, at Nomad Fulcrum. And all you have to do is basically to stop on top of the RWA sector and holding a stake in the tokenized assets. That is a big emerging trend, and it's actually sustained and promoted by people like Larry Fink, who's the CEO of BlackRock, who are actually literally talking about tokenizing and executing on tokenizing a lot of ETFs, tokenizing a lot of funds, tokenizing a lot of pension funds. So it's actually happening, and here's one of an example. So make sure you hit the follow button on the Nomad Fulcrum. And as we get closer and narrow towards the end of a session with our today's guest, Paweł Łaskarzewski, what's the kind of like a main takeaway that we want people to have and to basically take outside of the away from the show? Is it something that, okay, there's going to be so much hopium, the crypto growth, sure, but I shouldn't really care about it until the bear market, or it's actually otherwise, and it's 100% different situation where, okay, it's the time is now, the best time is now to get engaged and just jump on this RWA bandwagon and then benefit in the bear market on top of it because of having this 130-40 percentage points difference in the returns and securing and protecting the capital. So is it now or later?
I believe it's both. It's now and later, because like we are at the very beginning. Like a lot of people are saying, okay, crypto is on the highest. Like it's too late already. No, it's just the beginning. Like if you will check how small crypto is, because we are in the bubble. So people in crypto thinks that it's too big right now. But if you will go outside of the bubble, you will see that crypto is like a tiny, dot in the overall, worldwide capital and business and everything, right? So we are very small, but we are growing. So it's going to become big. So it's definitely now, because the market is, growing. The RWA market is growing right now. I started to speak about RWAs like a year and a half ago, and no one even was speaking about this shortcut. This shortcut did not existed back then. Like RWA, no one was calling stablecoins RWA projects because no one was speaking RWAs. And right now, we see that it's growing. Every financial company is speaking about tokenization is a major thing. Like last year, we were together in Davos, and in Davos, there were three things. The most important one, it was ESG, sustainability, AI, and tokenization. So that shows how important that market is. So that's why now, but also why later, because that market is going to evolve. It's going to change. It's going to shift. Some players that are right now, the major players, will gonna die. Of course, it always happens. It's inevitable. So there will be a lot of room for other organizations, other players, other ideas. And because of the regulatory tsunami that is coming, a lot of organizations that are delaying the process of being regulated, getting licenses, etc., unlike us, they will have a lot of problems, because to get a license, to get regulated, it takes time, like a year and a half. So if you will say today, I would like to get regulated and release that tokenized product, operationally, you will gonna be able to do so in 1.5 years. So that's why later, because I believe that right now we have amazing ideas, amazing founders in the space that are having the ideas now. But operationally, because of different things, they are going to be able to release, and the regulations, they are going to be able to release those products like year and a half from now, because it's not easy to swim within the regulated market waters. It's complicated, it's time consuming, money consuming, but the toughest will survive. So yeah, now and later.
Yeah, the fittest survive, right? That's the survivorship bias. I think that many businesses just operate on those existing trends and try to become better than the others in terms of competing with what sort of yields they generate, which kind of like attractive, benefits they can give to the users. And it seems that Nomad Fulcrum is pulling this out pretty well. So I encourage highly again to give it a check to the Nomad Fulcrum X profile. Do make sure to follow them on nomadfulcrum.com on the website as well. Anytime the platform is going to go live, so I highly encourage you that. And I'm speaking that as an equity holder, as a token holder, as a fan, as a proponent, as a good friend, to Paweł as well. So that's kind of like getting us closer to the very wrap. And before we actually just hit the stop for the recording, I highly encourage everybody to just take it up an opportunity on the Black Friday deals that we have still up and running for a limited time, because the Black Friday celebration goes on throughout the week, and while the world is celebrating, the companies are basically encouraging a lot of earnings through that. And as they encourage a lot of earnings, the stock actually assets prices are going up, so it's green in the markets, right? That's where the whole global world globally celebrate. This is like a feast for a lot of businesses, and as a result, those people are also getting richer in terms of the businesses, that the token holders, the stockholders. This is why you see a lot of markets basically picking up over the last couple of weeks. And RWA sector being on the $51 billion mark on the total capitalization is also growing 100% growth over just to last 3-4 weeks. It's spectacular. So on that note, scanning the QR code basically can get you access to the special materials and special software, basically to help you stop avoiding all those scams, to help you stop falling victim basically to all those fake gurus and self-proclaimed experts. If you want to get confidence, if you want to get skin in the game and just get proper guidance from people who tell you exactly how to learn early and how to get all this beginner-friendly information, learn behind the closed doors, and just feed away all those idiots and trolls. Well, we've all been there, we've all done that. We lost a lot, we made even more on top of it. So let yourself guide, find the right people to guide you through the entire process. And all you have to do is to book your limited seat, 50% off or more, just scanning the QR code. So this is highly encouraged. And that's actually a wrap of today's session, ladies and gentlemen. RWAs is here to stay. The capital markets are going to be going deeper and bigger and broader into the tokenized RWAs. And it seems that our today's guest, Paweł Łaskarzewski of Nomad Fulcrum, is also here to stay and accompanying us through all those incredible rallies and sessions as we go throughout 2024, 2025, and the bear markets to come. Thank you so much for spending time with us, Paweł, and I see you on the next session.
Thank you very much. See you soon.